Today we're going to look at the 2013 costing question, question 8 on the 2013 exam. This is job costing, or sometimes it's called product costing. And there are three distinct parts to this question, each for a separate company. You have part A, which is stock valuation for a company called Blue Limited. Part B, which is product costing for a company called Grace Limited. And part C is looking at under or over absorption for a company called Hake Manufacturing Limited. So three distinct parts. It's a good question to practice because then these parts can appear in other questions individually or as part of a greater question. So therefore this one encapsulates quite a lot of the topic. So we'll go through this piece by piece. Part A says Blue Limited is a retail store. It buys and sells one product. Nice and simple. The following information relates to its purchases and its sales for the firm for the year 2012. It gives you, it divides the year into 3/3, January to April, May to August, and September to December. And it tells you about the purchases in units and money. It tells you about the sales on credit and the sales on cash. And then it also tells you about opening stock. And the question asks you to calculate the value of closing stock using a first in, first out basis, and also then prepare a trading account at the end of the year. The first part of this is preparation work, and I've done it here in this table, where you take the numbers for January to April, and you write out the 4,000 units by €5 and you multiply it to get 20,000. The 1,000 units by €9 per unit. Let me just make that more visible. Sorry. Which will give you €9,000. And the 1,500 units by €12 per unit gives you 18,000. You do the same for May to August, period 2, and you multiply out. And you do the same for September to December, period 3, and again you multiply out. Now, in a situation where you're running out of time in an exam, this is quite time consuming to write out this table. You can literally do that on the exam paper because it's kind of replicating the structure of the exam paper, as long as you remember to hand up the script afterwards if you've written anything on it at all. Then you're going to total these up to get 8,200 units. Now let's explain what these numbers are. This is the amount of purchases for the whole year, 8,200 units, and it cost 48,600 to purchase that. And then the sales are 3,600 units of sale on credit and 4,000 units of sale for cash. And those sales equate to 37,600 there and 51,700 here. So that is the sales, and this one here is the purchases. Now, why do we need to calculate all of that? Because we're trying to establish our closing stock. So down here, I'm going to give you what is a basic kind of summation of how we can calculate closing stock. That is your opening stock, how much you begin with, plus the things that you buy, purchases, take away anything that you've sold, will leave you with what you have at the end of the year, which essentially is your closing stock. Now in units, we can do this now because we've just calculated out these units. So the opening stock is given to you in the question as 4,500 units. You add on the 8,200 that you bought, and you take away 7,600, which is this plus this. The 3, 6, and the 4,000 gives you this. And that will give you the closing stock of units, which is 5,100 units. Now, down here, the closing stock equates to 5,100 units. Now, the phrase first in, first out then becomes relevant to the question. The policy of FIFO, first in, first out, means that the closing stock will be the most recently purchased 5,100 units. Because the first stuff that the company has bought will be the first stuff that it sells. So therefore, by definition, the things which are left at the end unsold must have been the things which were bought most recently. So therefore, you have to work from the the most recent purchases backwards. I'm just going to do it like that to establish which 5,100 units that is. And I'm going to do that down here. So you're going to take all of September and December's numbers, which is 1,700 by 8. This information here, we've just replicated it here. And you're going to take all of May to August. And now you are up to 1,700 plus 2,500 is 4,200 units. We still need to get to 5,1. So you need to even delve into this 4,000, not entirely, but you need to take 900 of those at €5 each. And 900 by €5 is 4,500. And when you get these three components, all of period 3's purchases, all of period 2's purchases, and 900 out of period 1's purchases, you get your total amount of units, which we know should be 5,100. And that equates to 33,100 when you multiply them out by the differing numbers as the year goes on. So 33,100, that is the answer to part 1 of the question. Now we move this across to part 2 of the question. You're asked to do a trading account, and a lot of the hard work is already done now here for you. For example, the sales, where did I get this 89,300? Well, that is a combination of the 51,7 and the 37,6, which you have already worked out here and here. So that is your total sales. Your opening stock, well, your opening stock is in the question, that's 4,500 units by, I think it's €5 in the question, indeed it is. And then your purchases are this 48,600 already worked out. And your closing stock is 33,100, which of course we worked so hard to get a moment ago. And you work all of that out to get your gross profit. And the gross profit is 51,300, and that is the answer to the trading account. Part A is a commonly asked part in job costing. We're going to look at part B. Part B talks about Grace Limited, a manufacturer of computer equipment, and it has 3 production departments. It tells you how much the budgeted overheads are for each department, in other words, the general costs, and it tells you how much the labor hours are. So in each department. And then it asks you in part A of the question to calculate the overhead absorption rate for each department. So that is basically this formula here, which is budgeted hours divided by budgeted overheads divided by labor hours. They're the only hours we have. We don't have machine hours in this question. So therefore, if we want to get a rate per hour, this is the only number we have. So you take your 180,000, which is your budgeted overheads, and you divide it by your expected or budgeted labor hours, and you're going to get €5 per labor. You do the same for the assembly department. It's 99 divided by 18 gives you 550. And the finishing department is 36 divided by 4,500 to get €8 per labor. Now it's important we understand that those are the overheads, like electricity, insurance, rent, and rates. The total overheads expressed as an hourly rate per hour. Now, then they give you the details of a particular job number 666 in this situation. And they say, calculate the selling price of the job using the following information. Well, before we can calculate the selling price, we must calculate the cost price, how much it cost us to make this. And there are 4 distinct parts to the cost of a product. There's materials, there is the labor, the wages we have to pay, there are the overheads, and in this question, they also advise you that there is a general administration overhead as well, which we will speak about when we get to it. So the materials, they tell you that it's 30 kilos of whatever it is, it's computer equipment, 30 kilos at €10.20 per kilo. You multiply that out to get €306. The direct labor or the wages, well, they tell you that in the manufacturing department, the wages are €4 per hour. very low wages in this question, but nevertheless, €4 per hour. And we are told that job 666 takes 20 hours. So 4 by 20, 80. €2.50 in the assembly takes 6 hours, 15. And 375 in finishing, given in the question, by 4 hours for job 666, 15 again. You add up all three to get that 110. Now, in the budgeted overheads, it is the same three sets of hours, 20, 6, and 4. But here we're trying to figure out how much the insurance, rent, rates, electricity, all that is. We already have calculated these hours. These are 5, 550, and 8 from part 1 of the question. So we multiply by 5, 550, and 8 to get these numbers here, and that will give us 165. So you're using the rates from part 1 of the question, part B1, and the hours from the question. And then finally, the general administration overhead. Well, that is for the whole department. Sorry, for the whole company across all three departments. So we know that the total hours here are going to be €30 for job 666. But what, because that's 20 plus 6 plus 4 gives you that 30 hours. But what is the rate? Well, we have to go over here and we have to say, what is the general overhead, the total overhead? And when you multiply or when you add that out, you're going to get, well, you're given 1,170,000 divided by the total amount of hours, and you have to add up the total labor hours for all three departments. And when you divide that in, you get €20 per labor hour. That's for all of the office administration, all of the secretarial work, all of the payroll work, all of that. You bring that €20 back over and you say, okay, for this particular job, that's 30 hours by €20, which is 600. You add up all four components to get your total cost of production, which is 1,181. So when you know how much it costs you to make a job for a client, well, then you can factor in your profit to find out how much you wish to sell it for. So in this question, it says all orders are using a profit margin of 25%. That means that the profit is 25% of the selling price, or in other words, the costs are 75% of the selling price. So we call this 75 and we multiply it up to 100, and then the middle number will be the actual profit margin, and the selling price here is 1,574.67. And now we're going to have a look at part C of the question. And part C of the question is about under and over absorption of overheads. It says the information set out below refers to the budgeted and the actual costs of Hake Manufacturing Limited. So the first information in the first table is what you expected to happen prior to the year occurring, and then the second table is what actually happened. And we're going to look back in hindsight and see how accurate our predictions or our budgets were. Part A of the question says, calculate the departmental overhead absorption rates for department A, B, and C. Well, this is using the budgeted numbers. This is finding out how much the hours were per, how much the overheads were per hour for department A, B, and C. So you take your total overheads and you divide by your hours. But in this question, you do have machine hours and labor hours. So in the first table, you see how you have both hours. You need to pick the most suitable one, and that is the dominant one, whichever is the biggest number. That's why for Department A, I have 160,000, which is the overhead. Now I have an option of either 32,000 machine hours or 7,000 labor hours. Of course, I'm going to go with the machine hours. They're much more significant here. So 32 into 160 gives you €5 per machine hour. The overhead for Department B is 33,600. The labor hours are significantly more. So therefore, we're going to divide that by the labor hours to get 70 cents per labor hour. And in Department C, the overhead is 46,200, and there is only labor hours. So therefore they take away our choice here. We have to go with labor hours, and that's going to be €2.10 per labor hour. And that is part one completed, getting those budgeted overhead absorption rates for the three departments. Now part two, a little bit complicated here, but we have to look at whether or not we have under or over absorbed, or in other words, have we budgeted correctly, or have we been a bit too generous or a bit too stingy on our overheads for the year. So the first thing you're going to do is you're going to put down your actual overheads. Now, I'm going to highlight this across. This is for the three departments and the total. And you're told that the actual overheads, the real numbers given in the question, are 175, 29,000, 50,000, and 254. Now, that 254 is a combination of these three added together. Now, the absorbed overheads. How accurate were these three numbers? Well, we're going to apply them to the real hours that happened and see how close or how far away we were. So the real hours are 37,000. Machine hours, by the way, because of course this is a machine hour rate. So therefore 37 by 5 is actually 185. Now 40,000 is the real hours for Department B by 70 cent is 28,000. And 27,000 hours is the real hours, not 22, 27,000 by 210 is 56,700. Again, you can add those three totals across to get this, 269,700. And then you have to say whether or not you were above or below, under or over absorbed. So let's have a quick look here. So in Department A, you planned to have 185,000 overheads. In fact, you came in at 175,000. So you overplanned or overabsorbed your overheads by 10,000. Now, what does that mean? Well, if you read this sentence down here, what it means is in Department A, the real costs incurred were 10,000 less than expected. We had overabsorbed our overheads. Therefore, the profits are going to be 10,000 greater than expected. So it's a happy situation when you overabsorb, really, because you're better than you were expecting to be. Let's look at Department B. You plan to have 29,000. Sorry, excuse me. You actually had 29,000. Now you planned to have 70 cent per hour, and 70 cent per hour by 40,000 is 28,000. So actually, you underabsorbed by €1,000 there. Now, what does that mean? If you read Department B down here, the real costs incurred were 1,000 greater than expected. Therefore, we underabsorbed our overheads. Therefore, profits will be €1,000 less than expected. And then finally, you do the same process for Department C. Okay. And you say to yourself that the actual rates, the actual overheads were 50,000. When you multiply your 27,000 real hours by the rate of €2.10 above in part one, you're going to overabsorb by 6,700. What does that mean? That means in Department C, if you read horizontally here, the real costs incurred were 6,700 less than expected. We had overabsorbed our overheads. Therefore, the profits are going to be 6,700 greater than expected. The total column is just a combination of the three departments adding horizontally. And you're asked in part B of the question to show the under and over absorption and explain what these figures mean, which is what these sentences at the bottom are about. It says in total, the real costs incurred are 15,700 less than expected. Overall, we had overabsorbed our overheads, and the profits are going to be 15,700 greater than expected. And I just put in a sentence here to say, we're looking at the accuracy of our overhead absorption rates in part one with the benefit of hindsight to see how close the real numbers are budgeted or predicted rates.